Next, we've got Vinay Rajani joining in on the show, Kunal Bothra as well. Gentlemen, hi, both of you. Morning. Vinay, if I could just start off with you, what's the call on the index per se? Some more consolidation, or do you think this time around we could push it a little bit higher, as we did attempt in the latter part of last week?
Yeah, good morning, Aisha, and thanks for having me on the show. So last week remained range bound and 21,800 acted as a strong resistance. And on the downside, we saw that 21,500 is a strong support, and that was the low which was there in the last weekend. If we were to see the candlestick pattern, last week Nifty formed a doji candlestick pattern on the weekly chart. So after a prolonged uptrend, we have witnessed this kind of pattern which shows some indecision in the trend. So some sort of tiredness is there. Some oscillators are also reached the overbought zone. So tiredness is there, lack of momentum is there, but primary trend is still positive. We are advising our clients to hold their Nifty long positions with the strict stop loss of 21,500. Though some indicators are showing some overbought status, but unless we see price breaking important support, we should continue to hold on to the long position. The reason behind that we are asking our clients to hold longs is the strong breadth in the market. Around 92% of the NSE 500 stocks are trading above their 200 days moving average, and mid cap, small caps are actually holding very strong on the charts. So that's the best part of this current trend, and that's why we feel that though there could be some consolidation, though there could be some lack of momentum, but stock specific market will continue to remain bullish. We have entered into a result season now, so there could be a stock specific action and lot of anticipation due to the result announcements. So we believe that benchmark indices will remain in the range, and short-term range is 21,500 to 21,800. And overall, we see stock-specific bullishness to continue in the coming days.
All right, let's find out Kunal Bothra's view as well. Morning, Kunal. And just going by what we were discussing earlier this morning, it seems like the trend or the strategy for the year ahead is going to be not individual sectors in which you can necessarily make money, but nail it down to individual stocks, and it's going to be prudent to adopt that strategy for the year ahead. Would you agree, going by what we've witnessed in the first week of Jan?
Yeah, largely looks like, because I think so far over the last couple of days, or maybe one full week for the entire week of Jan, I think we've seen mixed reaction coming across from few sectors. There have been some beaten down sectors, or more often underperforming sectors, which have made a good comeback. The performing ones are the ones where you're seeing some bit of cool off happening. So I believe that the reaction could be a bit mixed. But I think interesting data which has actually emerged on the indices and the index futures, which I wanted to flag off, and one of them particularly is emergence of short covering, rather short built up, as well as covering of long positions for both the indices Nifty as well as Bank Nifty. The other interesting part is vols. The implied vols, they have started to increase for individual stocks. This also could probably be one of the major reasons why you've suddenly seen a sudden bout of volatility which has come back into individual stocks as well as the entire market as such. And the third and the most important factor is there is a lot of confidence brewing from option writers, which is very clearly visible into the Nifty as well as Bank Nifty. For example, on Friday, we saw even 21,700 mark, which is at the money to slight in the money calls, seeing one of the highest built up in terms of open interest. That itself tells you that the market expectation is to be a bit more tempered from current levels. And if you go by the last few days of price action, it indicates that the month of Jan could be a bit flattish to consolidative.